China just broke a record nobody saw coming. Not in AI, not in electric cars, in memory chips. One company just filed to raise almost $10 billion in a single IPO. Retail investors didn't just show up. They flooded in 9.4 million orders, oversubscribed by 212 times. And 3 days before that, the U.S. government quietly labeled this exact company a Chinese military company. So what is this company? Why does it suddenly matter more than almost anything else in tech right now? Stay with me, because this isn't just an IPO story. This is a story of who controls the AI revolution's most important ingredient. And it's happening right now. Let's rewind for a second. A few weeks ago, most people outside China had never heard the name CXMT. Now it's on every trading desk in Asia, every semiconductor analyst's watch list, and every headline from Bloomberg to Reuters. CXMT stands for ChangXin Memory Technologies. It's a memory chip maker based in Hefei, China. It doesn't build processors. It doesn't build GPUs. It builds DRAM, the memory that sits right next to the brain of every computer, server, and AI system on Earth. And for years, almost nobody outside the industry paid attention. That's over now. CXMT just priced its initial public offering on Shanghai's Star Market, the chip-focused exchange where China lists its most strategic tech companies. The price? 8.66 yuan per share. The size? Up to 7.69 billion shares, including the over-allotment option. The total raise? As much as 66.6 billion yuan. That's roughly 9.8 billion US dollars. Let that number sit for a second. Nearly $10 billion. For a company that 5 years ago, most investors couldn't have named. This isn't just big. This is close to becoming the second largest IPO in Chinese history. And it didn't happen by accident. But here's the twist almost nobody is talking about. This company was designated a military threat by the U.S. government just weeks before its IPO. So how does a company under U.S. scrutiny become the hottest stock in Asia? Keep watching, because the answer says a lot about where the global tech war is actually heading. Let's talk numbers. Because the retail response to this IPO was not normal. When CXMT opened its books to individual investors, the retail portion was 212 times oversubscribed. That means for every single share available to regular investors, there were over 200 people trying to buy it. Total orders from individual investors? 9.4 million. 9.4 million people trying to get a piece of memory chip company most of them had never heard of a year ago. Why? Because everyone can see what's happening in the background. AI is consuming memory faster than the world can produce it. And China just handed its investors a direct way to bet on that trend. Without needing NVIDIA, without needing Samsung, without needing anyone outside their own borders. That's the real story here. This isn't just an IPO. It's a signal. China is telling the world, we don't need to import memory anymore. We're going to build it ourselves. And we're going to fund it ourselves too. Now here's where it gets tense. Just 1 month before this IPO, the U.S. Department of Defense added CXMT to its list of Chinese military companies. That's not a small label. Companies on that list face restrictions, reputational risk, and in some cases, limits on doing business with American entities. So think about the timing here. The U.S. flagged CXMT as a national security concern. And weeks later, Chinese investors respond by throwing 9.4 million orders at its IPO. That's not a coincidence. That's a message. The more the West tries to isolate Chinese chip companies, the more China doubles down on funding them internally. This is the exact same pattern we saw with Huawei. The exact same pattern we saw with China's EV industry. Restrict access from outside, and the response is build faster from inside. And CXMT just became the newest test case for that strategy, at a nearly $10 billion scale. Now, you might be thinking, okay, so China has a strong memory company. Is that actually a threat to Samsung and Micron? Here's the uncomfortable answer for the industry's biggest players. It might not need to catch up. It just needs to keep growing at this pace. Let's break down exactly why. To understand why this IPO matters so much, you need to understand what's happening to memory prices right now. Globally, this isn't a normal market. This is what analysts are calling our RAMageddon. Here's what that actually looks like in numbers. DRAM contract prices rose an estimated 90 to 95% quarter over quarter in the first quarter of 2026. Then another 58 to 63% in the second quarter. Some DDR5 kits that cost around $95 in mid-2025 are now approaching $550 to $600. That's almost a 480% increase. This isn't a niche problem for gamers building PCs. This is hitting everyone. Lenovo, Dell, HP, Acer, and Asus have all warned that laptop and PC prices could rise 15 to 20% in 2026 purely because of memory costs. Even Tesla is affected. Elon Musk himself said the company is facing what he called a chip wall. His words, not mine. He described the choice as hit the chip wall or build a fab. Even Cisco felt it. Bloomberg reported that surging memory prices could erode Cisco's margins by roughly 200 basis points in a single quarter, just from more expensive memory modules going into networking equipment. This is how deep the shortage goes. It's not contained to phones or laptops. It's touching cars, networking hardware, cloud infrastructure, everything. And the cause is almost always the same three letters: AI. Here's the mechanism in simple terms. AI servers don't use normal memory the way your laptop does. They use high bandwidth memory, or HBM. It's the ultra-fast memory that sits directly next to AI accelerators, like NVIDIA's most advanced chips. HBM is brutally difficult to manufacture. It requires advanced packaging, extreme precision, years of engineering refinement. And right now, it's basically sold out for all of 2026. Manufacturers are converting standard DRAM production lines into HBM production lines because HBM is more profitable and AI companies are desperate for it. Industry estimates suggest roughly a 3-to-1 conversion ratio. That means producing HBM eats up wafer capacity that used to make regular DDR4 and DDR5 memory. So standard memory supply shrinks. Prices for standard memory spike. And the shortage spreads to every device that isn't an AI server. IDC projects global DRAM supply will only grow about 16% in 2026. NAND supply about 17%. Both numbers are well below the historical norm of 20 to 30% growth. Meanwhile, McKinsey projects $7 trillion in data center spending through 2030. Over $5 trillion of that focused specifically on AI. Read that gap again. Supply growing 16%. Demand backed by trillions of dollars. That imbalance is the entire reason memory has become the most valuable real estate in tech right now. So here's the real question. If demand is this insane and supply is this tight, who benefits the most? You'd think it's Samsung, or SK Hynix, or Micron, but there's a fourth name quietly climbing the ranks. And it's the same company we've been talking about this entire video. Let's be precise here. CXMT is not competing with Samsung and SK Hynix in the most advanced HBM chips. Not yet. SK Hynix remains a dominant HBM supplier for many of NVIDIA's flagship AI systems. Samsung and Micron are pouring billions into next-generation memory to defend their position. CXMT's real strength today is in conventional DRAM, not cutting-edge HBM. But here's why that still matters enormously. CXMT has already become the world's fourth largest DRAM manufacturer, holding roughly 7.7% of the global market as of the end of 2025. That's remarkable for a company founded in 2016, barely a decade old, going head-to-head with companies that have had a 30-year head start. And in a memory market where standard DRAM alone is up 90+% in a single quarter, being a major supplier of conventional memory isn't a weakness. It's a gold mine. CXMT doesn't need to beat Samsung at HBM to make an enormous amount of money right now. It just needs to keep shipping standard DRAM into a market that is starving for it. That's exactly what this IPO money is for. Expanding fabs, increasing output, buying time and capacity while the shortage lasts. And remember, the shortage isn't expected to end soon. Analysts widely expect elevated prices and tight supply to persist into late 2027 or even 2028. That's not a short window. That's years of runway for a company that just raised nearly $10 billion to expand production. Now zoom out with me for a second, because this story is bigger than one stock. For decades, the global memory industry was controlled by exactly three companies: Samsung, SK Hynix, Micron, two Korean, one American. China had almost zero meaningful presence in that club. That's the part that's changing right now. In real time, every AI data center needs memory. Every smartphone needs memory. Every electric vehicle needs memory. And right now, a huge portion of that global demand still runs through companies outside China's control. Beijing has made no secret of wanting to change that. Semiconductor self-sufficiency has been a stated national priority for years. CXMT's IPO isn't just a fundraising event. It's a statement. It says, China now is a serious, investable, homegrown alternative in one of the most strategically important industries on the planet. And investors, 9.4 million of them, just voted with their money that they believe in that statement. This is exactly why the U.S. designation matters so much. It's not really about CXMT as a single company. It's about what CXMT represents. A crack in a market that used to be a closed club of three. Now here's what almost nobody is asking. What happens next? Does this become China's version of the EV story, where a company nobody respected eventually started exporting to the entire world? Or does CXMT hit a ceiling the moment it tries to compete in the most advanced memory segment? Let's talk about what has to happen for either outcome to play out. Here's the honest, balanced picture. CXMT still has real limitations. It doesn't yet have a meaningful presence in HBM, the most profitable and technologically demanding segment of the memory market. That gap matters because HBM is where the AI boom's biggest margins actually live. Samsung, SK Hynix, and Micron have decades of manufacturing experience CXMT simply doesn't have yet. Advanced packaging, yield optimization, deep relationships with NVIDIA and other major AI chip designers. New fab capacity from Micron and SK Hynix isn't even expected to reach volume production until 2027 at the earliest, which tells you how far ahead the planning cycles are in this industry. CXMT is playing catch-up against companies already 3 to 5 years into their next expansion phase. But here's the pattern that history keeps repeating, industry after industry. Today's follower becomes tomorrow's challenger. Tomorrow's challenger becomes a market leader. We watched this exact movie with Chinese EV makers. A decade ago, almost nobody took them seriously against Toyota, Volkswagen, or General Motors. Today, they're some of the largest EV exporters on Earth. Semiconductor manufacturing doesn't move quite that fast. The capital requirements are enormous. The engineering is far less forgiving. A single defect can ruin an entire wafer. But the trajectory matters more than the current gap. CXMT went from founded in 2016 to fourth largest DRAM maker in the world in under a decade. If that pace continues even partially, the distance between CXMT and the established leaders could shrink faster than most analysts currently expect. That's not a guarantee. It's a possibility. But it's a possibility now backed by almost 10 billion fresh dollars. Let's bring this back down to earth. Because this isn't just a story about billionaires and IPO prospectuses. If you bought a laptop recently or you're planning to, this story already affects you. Memory shortages are a direct reason prices are climbing across nearly every consumer device. If you follow AI stocks, the story matters even more. Because the entire AI boom is quietly bottlenecked by something most people never think about, not GPUs, memory. And if you care about the broader tech rivalry between the US and China, CXMT is now one of the clearest data points we have. A company flagged as a national security concern by one government and simultaneously backed by nearly 10 million retail investors from another. That tension isn't going away. If anything, it's just getting started. So where does this actually go from here? Does CXMT stock so the moment it starts trading? Does the U.S. escalate restrictions in response? Does Samsung and SK Hynix respond with their own aggressive expansion? All three of those things could happen at the same time, and all three would reshape the memory industry for the rest of this decade. Let's wrap this up with what to actually watch for next. Here are the 3 things worth tracking if you want to stay ahead of this story. Number 1, the trading debut. Once CXMT officially lists on the STAR market, watch how the stock performs on day 1. A 212 times oversubscribed retail book usually means a strong opening pop, but it also means volatility once early investors start taking profits. Number 2, U.S. and allied response. Watch whether the Chinese military company designation leads to further restrictions, export controls, investment limits, or even pressure on international customers who might otherwise buy CXMT memory. Number 3, HBM progress. This is the one that actually matters most long-term. The moment CXMT announces real traction in high bandwidth memory, even a small foothold, that's a signal the balance of power in this industry is genuinely shifting, not just in volume, in technology. Keep an eye on all three, because together, they'll tell you whether CXMT becomes a genuine long-term rival to Samsung and SK Hynix, or a company that peaked at its IPO. Let's zoom all the way back out. A few years ago, the entire AI conversation was about processors. Who has the fastest chip? Who has the most GPUs? Who can train the biggest model? That conversation has quietly changed, because none of those processors matter if they don't have enough memory to feed them. CXMT's near $10 billion IPO isn't just a Chinese finance story. It's proof that the next major battlefield in the global tech race isn't just about processing power anymore. It's about who controls the memory that keeps that power fed. Samsung, SK Hynix, and Micron still lead the most advanced segments of this industry. That hasn't changed overnight, and it won't. But the gap is no longer uncontested. And 9.4 million retail investors just bet that it's going to keep closing. If this video helped you understand why memory chips are quietly becoming more important than processors in the AI race, hit that subscribe button, because this story is nowhere near finished. Drop a comment below and tell me this. Do you think CXMT eventually becomes a real challenger to Samsung and SK Hynix? Or does it stay a domestic Chinese story? Like this video, if you want more breakdowns like this one. Share it with someone who's still only talking about NVIDIA and GPUs, because the real story right now is happening one layer deeper. And if you want to stay ahead of the next move in this story, turn on notifications. Because when CXMT starts trading, when the US responds, or when the next major memory player makes a move, we'll be covering it here first. Thanks for watching. I'll see you in the next one.